Hello everyone, welcome back to my YouTube channel. Today's update is focused on the Vietnamese Dong, Vietnam's economy, and the latest developments that investors, currency watchers, and global market observers are following closely in June 2026. If you are holding Vietnamese Dong, monitoring emerging market currencies, or simply interested in Vietnam's rapidly growing economy, stay with us, because today we are going to break down the newest exchange rate figures, what they mean, and how the broader economic picture could influence the direction of the Vietnamese currency in the months ahead. The latest update from Vietnam's banking system shows that the State Bank of Vietnam has set the daily reference exchange rate at 25,150 Vietnamese Dong per US dollar on June 8, representing a modest increase of 3 Dong compared with the final working session of the previous week. While a movement of just a few Dong may appear insignificant at first glance, currency traders and financial analysts often pay close attention to even small changes because they can reveal the direction of central bank policy and the broader trend developing within the foreign exchange market. Under Vietnam's current exchange rate mechanism, commercial banks are allowed to trade within a band of plus or minus 5% around the official reference rate. This means the ceiling rate for the day stands at 26,408 Dong per US dollar, while the floor rate is 23,893 Dong per US dollar. These limits help maintain stability in the market, while still allowing banks and businesses enough flexibility to conduct international trade and financial transactions. Major Vietnamese commercial banks also adjusted their rates higher during the opening trading session. Vietcombank and BIDV both listed the buying rate at 26,127 Dong per US dollar and the selling rate at 26,407 Dong per US dollar, an increase of 3 Dong from the previous session. These changes reflect the official adjustment announced by the central bank and demonstrate how closely commercial bank pricing follows the daily reference framework established by monetary authorities. Now, many viewers may be wondering why such a small movement in the exchange rate is receiving attention. The answer lies in the broader economic environment. Currency markets are rarely driven by a single number. Instead, exchange rates reflect investor confidence, economic growth, inflation, trade activity, foreign investment flows, and central bank decisions. The Vietnamese Dong is no exception. Vietnam enters the middle of 2026 as one of Asia's most closely watched emerging economies. Over the past several years, the country has transformed itself into a major manufacturing hub, attracting multinational corporations and becoming an increasingly important player in global supply chains. Foreign companies continue to view Vietnam as a strategic destination for investment due to its growing workforce, expanding infrastructure, and favorable position within regional trade networks. Recent economic reports suggest that Vietnam remains on a strong growth trajectory despite global uncertainties. International institutions and economic analysts continue to forecast solid expansion for the Vietnamese economy, supported by exports, domestic consumption, infrastructure investment, and foreign direct investment. While growth forecasts vary among organizations, the overall consensus remains that Vietnam is expected to continue outperforming many economies in the region. One of the biggest stories influencing the Vietnamese Dong right now is the balancing act being performed by policymakers. On one side, Vietnam wants to maintain strong economic growth and continue attracting foreign investment. On the other side, officials must manage inflation, exchange rate stability, and broader financial risks. A significant development emerged this week when Deputy Central Bank Governor Pham Thanh Ha indicated that Vietnam would increasingly rely on fiscal policy measures to achieve its growth objectives, because the room available for additional monetary easing has become more limited. He also emphasized that Vietnam would not sacrifice long-term stability for rapid short-term growth. This statement is important because it signals that policymakers remain focused on maintaining confidence in the economy and preserving financial stability while pursuing ambitious growth goals. For currency markets, stability is often just as important as growth. Investors generally favor countries where economic expansion is supported by disciplined financial management, a currency backed by stable institutions, predictable policy, and sustainable growth tends to attract stronger long-term interest from international investors. Another major factor affecting the Vietnamese Dong is inflation. Recent data indicate that Vietnam's inflation rate accelerated in May, reaching approximately 5.6%. Higher inflation can influence exchange rates because it affects purchasing power, interest rate expectations, and investor sentiment. Rising prices create additional challenges for policymakers, particularly when they are simultaneously trying to support economic growth. Inflation pressures have been linked in part to higher imported fuel costs and broader global economic disruptions. Energy prices remain a crucial variable for many economies, and Vietnam is no exception. When fuel costs rise, transportation and production expenses can increase across multiple sectors, creating upward pressure on consumer prices. At the same time, Vietnam's economy continues to demonstrate resilience. Industrial production remains strong, retail sales continue to grow, and international visitor numbers have shown encouraging gains. These indicators suggest that domestic economic activity remains healthy despite inflationary pressures. Foreign direct investment is another key story shaping expectations for the Vietnamese Dong. International corporations continue expanding their presence in Vietnam, strengthening the country's role in global manufacturing networks. One notable example emerged recently when reports indicated that Samsung plans to invest approximately $1.5 billion in a semiconductor testing facility in Vietnam. This project highlights the country's growing importance within the global technology sector and demonstrates continued confidence among major international investors. Large-scale investments matter because they often bring foreign capital into the country, create jobs, boost exports, and contribute to long-term economic development. Over time, sustained foreign investment can support demand for the local currency and reinforce confidence in the economy. District development is another area receiving significant attention. Vietnam has outlined ambitious plans to improve transportation networks, industrial capacity, and public infrastructure. Reports indicate that the government is seeking billions of dollars in foreign financing to support major infrastructure initiatives. Improved infrastructure can enhance productivity, attract additional investment, and strengthen the country's competitive position within regional and global markets. For many investors, the most important question is whether the Vietnamese Dong is likely to strengthen dramatically against the US dollar. This is a topic that generates considerable discussion online, particularly among currency enthusiasts. However, it is important to separate speculation from reality. The evidence currently available suggests that Vietnam's authorities continue to prioritize exchange rate stability rather than pursuing sudden or dramatic currency revaluations. The daily reference rate adjustments being announced by the State Bank of Vietnam are measured and gradual. The central bank's broader policy approach appears focused on maintaining orderly market conditions while supporting economic growth. Historically, Vietnam has managed its currency carefully to preserve export competitiveness while avoiding excessive volatility. A stable and predictable exchange rate environment benefits businesses engaged in international trade and helps reduce uncertainty for investors. Current market rates continue to place the US dollar in the range of roughly 26,000 Vietnamese Dong, depending on the institution and market conditions. Recent banking quotations and exchange rate data reflect this general range. Therefore, while the Vietnamese economy continues to grow and attract investment. There is currently no verified evidence supporting claims of an imminent dramatic revaluation of the dong to levels frequently discussed in speculative online forums. Investors should always distinguish between official announcements and unverified rumors. What makes Vietnam particularly interesting in 2026 is that the country is attempting to achieve a combination that many developing economies seek but few successfully maintain. Vietnam is pursuing rapid growth, attracting substantial foreign investment, expanding infrastructure, supporting manufacturing, and maintaining macroeconomic stability simultaneously. The country's export sector remains a major pillar of economic strength. Recent years have seen Vietnam emerge as a critical supplier of electronics, garments, machinery, and consumer products to markets around the world. Global companies continue diversifying supply chains, and Vietnam has benefited significantly from this trend. Export performance contributes directly to foreign currency inflows. When Vietnamese companies sell products abroad, they generate foreign exchange earnings that can support the nation's external balance and financial position. Strong exports often strengthen confidence in an economy's long-term outlook. Trade developments with the United States also remain an important factor. The U.S. continues to represent one of Vietnam's largest export destinations. Trade flows between the two countries have expanded significantly over time, creating opportunities for Vietnamese manufacturers and exporters. Another area attracting attention is Vietnam's long-term growth target. Policymakers have expressed ambitious goals for economic expansion over the coming years. Achieving these objectives will require continued investment, productivity improvements, infrastructure development, and effective policy management. Analysts generally agree that Vietnam possesses many of the underlying strengths necessary to sustain robust growth, although challenges remain. Those challenges include inflation management, global economic uncertainty, geopolitical developments, trade dynamics, and the need to maintain financial stability while pursuing growth. Every economy faces risks, and Vietnam is no exception. However, the country's recent performance has demonstrated a capacity to adapt to changing circumstances and continue moving forward. For currency investors, one of the key indicators to watch over the coming months will be the State Bank of Vietnam's daily reference rate decisions. While individual adjustments may appear small, the cumulative pattern can provide insight into broader policy trends. Observers should also monitor inflation data, export performance, foreign investment announcements, and economic growth indicators. Interest rate policy will remain another important consideration. Although Vietnam's monetary authorities have indicated that room for further monetary stimulus may be narrowing, policy decisions will continue to play a significant role in shaping financial conditions and currency market expectations. Another factor worth watching is the pace of infrastructure spending. Public investment projects can stimulate economic activity, create employment, improve logistics, and strengthen long-term competitiveness. If implementation proceeds efficiently, infrastructure development could become a major driver of growth over the next several years. Looking at the broader picture, the Vietnamese Dong remains closely connected to the overall health of the Vietnamese economy. Strong economic growth, rising investment, expanding exports, and stable policy making generally support confidence in the currency. Conversely, inflation pressures, global economic shocks, or significant market disruptions could create challenges. At this moment, the latest exchange rate update reflects stability rather than dramatic change. The official reference rate moved slightly higher. Commercial bank quotations followed accordingly. The broader economic environment continues to show a mix of encouraging growth indicators and challenges that policymakers are carefully monitoring. For viewers who follow Vietnamese Dong news regularly, The most important takeaway is that the current story is not about sudden currency revaluation. Instead, it is about steady economic development, measured policy adjustments, and Vietnam's continuing effort to strengthen its position as one of Asia's most dynamic emerging economies. The combination of ongoing foreign investment, expanding manufacturing capacity, infrastructure development, and strong economic activity continues to attract international attention. While inflation remains a concern and global uncertainties persist, Vietnam's overall economic narrative remains one of resilience and growth. As we move further into 2026, investors and analysts will continue evaluating how these factors influence the Vietnamese Dong and the broader economy. Every new inflation report, investment announcement, export statistic, and central bank decision will contribute to the evolving picture. For now, the latest data show a currency market that remains stable, a central bank that continues to manage exchange rates carefully, and an economy that is still attracting global interest despite a challenging international environment. That combination explains why the Vietnamese Dong remains one of the most closely watched currencies in Southeast Asia today. Thank you for watching today's update. If you enjoy detailed coverage of the Vietnamese Dong, global currencies, exchange rate developments, and international economic news, be sure to subscribe, turn on notifications, and stay tuned for our next update. We will continue monitoring the latest developments from Vietnam, the State Bank of Vietnam, major financial institutions, and global markets, so you can stay informed about the stories that matter most to investors and currency watchers around the world. Until next time, take care, stay informed, and have a great day.